We're going to hear from Tim Craighead from Bloomberg. Now, one of the things that we wanted to do for this event was to give some context for all the discussion for the awards. We certainly saw after the global financial crisis that macroeconomic factors began to make a big impact on IROs' daily lives. It was as important to explain what was happening in the country and the region as it was to explain what was happening in your own company. So Tim Craighead is going to be addressing some of these macroeconomic factors we can be thinking about looking ahead. Tim is Director of Asia Research for Bloomberg Industries. He has more than 24 years experience in investment research. Before Bloomberg, he was at firms such as Ketchum Creek Capital Management, Goldman Sachs. He managed the investment review committee process for the U.S. Research Department at Goldman, ran product management, wrote research on global themes. Now, Bloomberg Industries was launched officially in 2012, a new feature on the Bloomberg terminal conceived as the first ever real-time equity research platform, the first ever. Well over 100, about 130 people now working in Bloomberg Industries, known as BI, including 25 here in Asia and growing, set to grow. Much like sell-side analysts, and many of them are former sell-side or buy-side analysts, but they don't make recommendations, they don't issue ratings. In fact, they lay out both the bull and the bear cases. It's a fascinating research process there at BI. So, Tim, if you would walk us through the presentation, then we'd be very happy to take some questions afterwards from the audience.
Very good. Well, thank you very much. As Neil had suggested, what he had proposed that we talk a little bit about is 2014. What's the outlook? What are the challenges and opportunities from an investor relations perspective? So with that in mind, what I would like to do is very briefly put BI, as we call it, into a little perspective. I won't dwell on it too much because we've already had a great introduction. Thank you very much. But then shift gears and look at what are we thinking about from a 2014 outlook. There's a baseline, but I have to say, it's one of the most intriguing years looking ahead that I can remember in a long time. There's cross currents backwards and forwards in numerous areas, and all of this, going to the fourth point, creates a challenge and an opportunity for you all as investor relations officers. So without further ado, I have to say right up front, I meant to mention, it is very interesting being in this room because I was here about 3 days ago, and this room plus where the lunch is going to be was a bazaar. It was actually bizarre. It was a Christmas bazaar. And so to see it transformed here with all sorts of people in suits is pretty intriguing. So nonetheless, it just jogged my memory sitting here looking out. But what is Bloomberg Industries? As Neil had said, a pretty unique platform. We try to pull together in one convenient place the traditional real-time flow of information that you're probably accustomed to with Bloomberg and other service providers. But we build on top of that a very purpose-built, industry-specific, comprehensive data set. So from macro to industry to company-level data to really help put an industry into context. And then importantly, with experienced primarily sell-side analysts, we do try to put intelligence and insight on top of that data, looking at fundamental trends, looking at critical themes, digging down into competitive positioning of this company versus that very clearly. All of this, whether we're working with sell-side clients, buy-side clients, or corporate clients, we're here to save you time, help to generate ideas, help to put industry and companies into perspective to really jumpstart the work that you need to do. So that's my advertisement on Bloomberg Industries for the day. Let's shift to the topic at hand. Looking at the global outlook and specifically the China outlook into next year, it's pretty fascinating. And I'm gonna walk through a couple of these charts and data tables because I realize it may be a little difficult to see in the back of the room. This is a screen off of Bloomberg that looks at consensus forecasts, and specifically at China. If you look into next year, it's pretty benign. somewhere, call it 7.5% growth. A little more than that early in the year, a little less than that later in the year. Inflation still rather benign, call it 3%, maybe a little bit higher. It's an okay outlook. Currency might continue to strengthen, but not too dramatically. With that backdrop, if that's all that there was, you might have a pretty easy job. But that isn't all that there is. As I had mentioned up front, the cross currents going into 2014 are as fascinating and numerous as I can recall in years. I've just mentioned a few of them here on this screen. I'm sure you can probably come up with a couple of others. But there are all sorts of elements and issues that are going to impact the broad outlook globally or with China, that are going to impact your industries and that are going to impact your company. And your challenge going into next year is clearly to stay on top of all of that. The next handful of slides, I'm going to delve into a couple of these and do a little bit more detail. Again, all of the screens that I'm using as part of this are directly off of a Bloomberg terminal. If you've got other information providers, you'll find similar information, I'm sure, in one form or another. But I think these are all, regardless of the platforms that you're utilizing, critical topics for you to stay on top of. The third plenum, need I say more? It is pervasive in the press here as of late. The initial communique might have been a little ho-hum, a little disappointing from a number of market watchers' perspective, but then the 60 points followed shortly thereafter, and I think everybody was possibly even shocked at some of the details. We've already started to see some specifics roll out of this. You might have noted earlier this week, there was an announcement out of the CSRC about liberalization of the IPO process. That will bring back the IPO market, number one, and number two, bring to bear much more market-oriented dynamics. And clearly through the plenum decisions, the whole concept of reform opening up and having the market as a decisive factor in the Chinese economy was pervasive. I think this CSRC announcement on the IPO market is just the start of just the tip of the iceberg of what's to come. The challenge for you guys sitting where you are is staying on top. What's the impact? How is it important to me? How do I communicate that out to my investor base and be in active discussion with the senior management in terms of what the market's going to think? Part of the plenum decisions was certainly SOE, state-owned enterprise reform. With that in mind, I think it begs the question, who are they? There are over 100 of these that the SASAC oversees. This chart takes a look at where they break down by sectors. Certainly, there's a heavy dose that are industrials and basic materials, but they span across the economic spectrum. Maybe a little lighter, clearly, in healthcare and consumer, but there are those as well. If we dig at the industry level and look at the top 12 industries, again, with a heavy industrial sort of bias, 50% of the SOEs are in these 12 industries. We've done some further digging, further analysis on these. We'll certainly be looking at the performance, the competitive impact, as further reform comes to bear, as there's the opportunity to invest either in SOEs or assets of SOEs from a private and market perspective. It's going to open opportunities. It's going to open up challenges. It may incite new competition. All of this is important from you all's consideration as you look into 2014. Shanghai Free Trade Zone, another similar issue. This came up before the plenum, and it certainly was spurred on after the plenum in terms of more details. Opening up financial services, improving legal and tax, but maybe the most important thing, opening up various sectors to the global investment. And it may only be in a microcosm, in a test tube in Shanghai right now, but clearly the idea is this is going to expand further. Again, from where you sit, the news is going to come fast, it's going to come furious, it's going to have an impact on your industries, on your competitors, and on your company. Investors are going to want to know. Another aspect of thinking about the Shanghai Free Trade Zone is that just say no list, the negative list approach to regulation. Certainly seems like things are shifting in that direction. Again, I think that the question is, how does it impact you? Totally different. Think about Japan. Certainly that economy, third largest in the globe, has recovered. And we've seen, as you in the top line here in this table, real GDP has accelerated first quarter, second quarter to about 4%. It's likely to be rather robust, expected in the fourth quarter and first quarter of next year. Is this a market for your companies? How is this impacting your business? Importantly, as we look into next year, the second quarter, when an excise tax goes into effect, there's a significant negative on growth. These dynamics are important. They're challenges. Same sort of comment. How does it impact your industry and your company? And if it weren't enough of a cross current in terms of what Japan is doing economically, think about the geopolitics. This table looks at China and its trading partners from an import perspective. You know, Japan provides almost $200 billion in imports into China. If things heat up further, you know, that's at risk. Again, are you buying from, are you selling to Japan? Staying on top of this geopolitical hot pot is a quest for us all. Separate issue, housing. You know, as we were looking a year ago, we were just starting to see a recovery in Chinese housing. It had been a drag, it had been negative on Chinese consumer sentiment, on Chinese wealth and spending. And we're just starting to look at an improvement with some loosening up of policy. That has gone far in excess of just a little bit of a jump start. This is showing in the top panel housing prices in the largest three cities, Beijing, Shanghai, Guangzhou are three of the largest cities. Increases are dramatic. The bottom panel shows that 68 of 70 cities across Japan are now showing, China are showing year-on-year price increases. This is starting to get concerns about, you know, is there a bubble? If it is, how does it come undone? Is it smooth and moderated, or is there a problem, as obviously we saw in the US back a few years ago? Important from the standpoint of all sorts of industries in terms of how this picture ends as we look into 2014. And the last thing that I'll comment on is the overall issue of rebalancing. Clearly, there's been a structural goal of the Chinese government to move away from export-oriented dependency towards more of a domestic-oriented economy. There's been a push to move away from investment orientation, which is half of the economy, if you look at it from a GDP perspective, towards consumption. We look at an ongoing flow of little building blocks to try to assess a mosaic across the Chinese economy about how this rebalancing is playing through. And you know, there's all sorts of data points that we look at. I'll highlight just a couple to give a finger on the pulse of what we're currently seeing. This is auto sales, which in the bottom panel, you can see SUVs are really driving the segment, up 73% in the last month. We continue to see, after a rather static 2010, 11, and into 12 new highs, it's representative of growth in the Chinese consumer, which clearly has lit up over the course of 2013. This is retail sales, a number of components on the more discretionary side of things in the top panel, such as cosmetics, beverages, auto sales, all of which are tracking somewhere in the mid-teens at this point, many of which are higher than they were earlier in the year. Bottom panel is showing total retail sales, which are climbing to new peak levels if you look year on year. Macau, looking at gaming revenues. I mean, clearly there's a significant acceleration that we've seen this year, and this is arguably the most direct play from a discretionary perspective on the Chinese consumer. And clearly visitation in the bottom panel is driving revenue growth in the top panel. And last but not least, on the consumer front, what's going on with confidence? After certainly a hiccup this past summer where there was the mini sort of financial crunch concern, consumer confidence has come roaring back quite smartly. All of this helps paint a picture, and there's a lot more behind this, that the consumer does appear to be reasonably healthy right now from a Chinese perspective, looking on a bottom-up market. In contrast, what are we seeing on the export story? Well, this is looking at container port traffic across a number of important important ports, Hong Kong, Shanghai, Shenzhen, and over the course of 2012 and 13, quite often it's negative year on year. Same thing with international air cargo. This is from 4 greater China airports, Hong Kong, Taipei, along with Shanghai and Beijing. This year has quite often, again, been negative year on year for some of these international air cargo trends. Point being with all of this that we're seeing consumer better, we're seeing the export-oriented having some pressure. There is a rebalancing going on. If I take all of these factors that we've looked at, clearly, as I had said, a year of cross currents. It's not just what that upfront economic forecast looked like, of a relatively benign, though somewhat slower overall GDP forecast. It's going to be a fascinating year, and it will clearly be challenging for you, in part because of that, and in part because if you look at what consensus expectations are currently looking at from an earnings perspective, they're aggressive. Again, this is going to be hard for some of you all to see in the back of the room, but the third column to the right looks at 2014 estimates for earnings growth. The column to the left of that is looking at sales growth. There are many industries that are showing expectations of mid-teens to 20 top line growth, mid-20s to 30% growth in earnings. Expectations aren't so conservative at this point. If I look, and again, this is 8 share listed stocks here in Hong Kong as a microcosm, but I think you can look at other points of reference to get a similar sort of point of view. Bottom up estimates around the street are rather healthy. The multiples where the stocks are trading over on the second to the right column are also not insignificant at this point. So, you guys, as I had mentioned before, have a tough job looking into next year. From an analyst perspective such as myself, I want to look at you all as a trusted advisor. I want to have somebody that I can have to talk to about critical drivers. What are the most important themes? How is your company competitively positioned? And to have that credible discussion to help me in my work. From your senior management's perspective, they need a finger on the pulse of the market. They need to be able to convey the right message to investors. They need a sounding board to understand what market reactions are going to be as things develop and strategy is put into place. As I think about it, maybe a little bit selfishly from a Bloomberg perspective, but I think it makes sense from an analyst perspective as well, use data to your advantage. Data is going to help you determine what reality really is, and it's going to help you sort of do the compare and contrast versus market expectation and market psychology. A couple of interesting quotes about the importance of data here. Napoleon Bonaparte certainly thought that it was important. 90% of war is information. Now, we're not in a war, but certainly a battle every day. Sir Arthur Conan Doyle, the author of Sherlock Holmes, made the comment about it being a capital mistake to theorize before you have data. Don't twist facts to suit your theories. Get the facts and make the theories fit what you've got in terms of data. And maybe the most notable quote there from a business professor, statistics are like bikinis. What they reveal is suggestive. What they conceal is vital. And indeed, your investor base wants to know the vital stuff. And for them to know the vital stuff, you got to know the vital stuff. Get the best data you can from whatever providers you're using. Complete the best picture that you have. Use it to answer the questions that you have every day. I'm asking these questions, you're getting these questions, you're thinking about these issues. I won't read through this laundry list. You can probably add to this, however. And what I will do is show how we think about a few of these within the context of the Bloomberg platform, whether it's using Bloomberg Industries, whether it's using our IR platform. BI sort of looks at the industry down into the company. Our IR platform looks at the company up into the industry. They marry quite smartly to help answer some of these questions. Market share. Who are your most important competitors? By the way, the screens here I'm looking at are for the gaming business. My day job is the director of research. My night job is I'm the casino analyst, so I get to go to Macau. And I'm going to pick on Melco Crown as an example, but if I want to know how this company is competitively positioned, I need the information. You can get this in multiple ways. Clearly, this is how we look at it. How big is their revenue compared to the others? How do I break that down into various segments? What are the most important drivers? For me, for this industry, among other things, I've got to understand what's going on with visitor arrivals, and in particular, visitor arrivals from China, which, as you can see with what I've highlighted here, have been growing over the course of this past year. And look at it on a monthly basis, and you'll see it more granularly as well if I shift the time period. Who's leading, who's lagging? I've got to understand competitive positioning of my company versus my peers. Both internally up to management and externally out to clients. This is important information. And again, here, we tend to break the business down along business segments that are important and instrumental to understand the fundamentals of the business. VIP gaming versus mass market is a critical point of reference, for example, in the gaming business. And as I had mentioned up front, we spend a lot of time thinking about what are the critical themes facing any given industry that we cover. One of the big ones for me is the whole shift in growth from VIP to mass market. And we do an awful lot of work on that. And we look, most importantly, at how the companies are positioned accordingly to these important themes. This is just an example. And certainly, who are the most important investors? How do you target those? There are multiple ways, clearly, you can accomplish this. We look at not only who your current holders are, but we also think about who owns you, but not your peers. You want to make sure you hold on to those. Who owns your peers, but doesn't own you? Those are opportunities potentially to connect with. All of these screens, as I mentioned, are on the platform that we run. This is the gaming platform straight up, and there's lots of gory detail underneath in terms of the data and the analysis. Our IR platform goes company by company. This is for Melco in terms of the information we bring to bear at the company level. We do bring, speaking of Greater China, all of our industries together into one platform called BI China that allows you to access a ton of data, industry by industry, theme by theme, that we feel are pretty important for this context. And Neil, with that, I'll wrap things up, basically under the pretense, as I had said, baseline view for next year is clearly a soft landing. But it's going to be a fascinating year. My guess is it's probably not going to be far off of a soft landing, but the volatility around that and the information flow that comes, the plus and minus at the sector and company level are going to be much more intriguing than just a sort of middling through soft landing story. And it's going to create a fascinating year for all of you dealing with management and dealing with your investor base. So thank you very much.
Tim, thank you. I want to come and come and sit down. Be happy to take any questions that the audience might have for Tim. I have a couple myself, and I believe, do we have a microphone? Yep, okay, good. So if anybody has a question, just give me a wave and we can address it to Tim. All right, here's something I want to know. You know, where I sit in New York, back in October, it was unbelievable what we saw going on in Washington around the debt ceiling, right? The government being held to ransom over this debt ceiling. It should have been a rubber stamp, but it wasn't. And the warning was that the whole world's financial system would collapse if the U.S. actually, you know, came up against the debt ceiling, reneged on its debt payments. The OECD even came out when it revised some of its growth predictions for around the world, said the U.S. has got to fix this. It's going to keep happening. It's going to keep throwing the economy into turmoil. What's your outlook in terms of how that debt ceiling mess is going to continue to affect companies everywhere?
I think one of the biggest issues on this front, and who knows, by the way.
Yeah, who really knows?
Politicians are politicians. Yeah. But I think there are a couple of fundamental issues that we think about that I think all of you all are probably thinking about as well. One is, you know, if things were to really go off the rails from a U.S. policy perspective like this, it impacts the risk-free rate. And if you look at the U.S. government bonds, if there is a problem from a fiscal policy perspective, and the 10-year, 20-year, 30-year bond is affected, that impacts everybody globally. And so, you know, from a practical perspective, I think that's one issue. From a sort of sector perspective, subject to kind of how all of this evolves, and there does seem to be some ongoing discussions that seem to be minimizing this issue, as you may have seen in the press years of late. But, you know, there will be cuts here or there. How that plays out from the standpoint of government spending, you know, the U.S. government is a big customer for an awful lot of companies. Mm-hmm. I think that's something that, you know, everybody's got to stay on top of, you know, from a practical perspective. You know, and in the end, you know, hopefully politicians, you know, figure things out. It's just as good for them to get reelected to fix this problem as it is anybody else. So there's a selfish motivation. So it's a tough question.
Well, hopefully we may see the end to this idea of needing congressional approval to raise the debt ceiling. It just seems crazy now. Okay, another question, again, from a U.S. perspective. We're seeing good economic reports in the U.S. We're seeing genuine signs that the Fed will start to taper its bond buying. Now, what I wonder, you know, is what that's going to do to equities in the U.S. and around the world as an asset class. Do you have any predictions for that?
Well, I'll state right up front, we don't make recommendations. I said that up front. So, I think it's one of these plus and minus balance sort of issues that, you know, we're constantly trying to stress test. On the one hand, you know, the Fed has clearly had a global punch bowl that they've been giving everybody. Emerging markets have benefited from excess liquidity that has flown in everywhere, but, you know, clearly earlier this year, we saw some of the emerging markets here in Asia go from being stars to, you know, falling significantly. Now, some of them had their own problems, but certainly part of this was investor anticipation of excess liquidity being taken away. So, you know, part of it is that. Part of it is that we'll see higher rates, and, you know, higher rates, you know, that's when it starts getting much more intriguing because you can get industry specifics. Are higher rates a bad thing or a good thing for insurance companies? Are they a bad thing or a good thing for banks? I can argue both sides depending on how the company is positioned. And importantly, the reason why they're raising or taking away the punch bowl is because the economy feels better. If the economy feels better, that's a good thing from a revenue perspective, broadly speaking. That can be good for earnings. And then you play that balancing act of, you know, higher rates What does it mean for earnings? What does it mean for multiples? And I don't think there is a straightforward answer. I think, broadly speaking, at this point, rates are still very low. They're not looking to go skyrocketing. It's still hard to find yield. And if the economy is feeling somewhat better, and that can drive somewhat better revenues, somewhat better earnings, then certainly some industries have the opportunity to perform quite well.
Okay, interesting outlook. Any questions for Tim? I mean, to me, this is one of something that we should all be thinking about. Just back in June, just the whiff of the Fed tapering was enough to send emerging markets into almost a tailspin. Yeah. And the idea of when the Fed really starts to pull back on that bond buying, are we going to see another 1997? It's kind of scary.
Well, I guess the last thing that comes to my mind on this front is, certainly the market is a discounting mechanism. An awful lot of what has been feared or is concern about Fed tapering, it's already been priced in to the market. Investors aren't going to wait until the day that it happens. They already started to discount the fact that it will happen. And it's interesting with this week's economic statistics coming through, generally a little bit better. You may have seen the U.S. employment report, certainly surprised on the positive side. It'll be interesting to see how markets react to that. Are they still worried about Fed tapering, or are they thinking more about, this is a better economy, and a better economy can be a good thing, not a bad thing.
Good point. Okay. Any questions for Tim before we let him go? In that case, let me say thank you very much to Tim Craighead from Bloomberg.
Thank you.
Thank you very much, Tim.